I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, as always, thanks for having me.
Are there cracks in the foundation of the Dow right now?
Yes, there's starting to be cracks in the foundation in a number of areas. You know, in addition to, I guess I need to explain a couple things. I mean, number one, you know, when you look at cycles and Dow theory, you're looking at market structure. And when I say structure, you're looking at the price action, you know, hard price. And then when you look at, you know, of course, indicators, be it breadth indicators or whatever, I mean, you're looking at, you know, some derivative of price, let's call it. And the one thing that I've noticed, and I've talked about here on the show, is that since the 4-year cycle low, back in 16 on most indexes on the industrials, it was in August of 15. But the entire advance, when you compare one intermediate term cycle to the next, there has been a steady progression from the very first intermediate term cycle up of waning breadth, waning internals, like I said, when you compare one to the other. Now, if you look at the cumulative data, because it's cumulative, that wasn't visible. Well, when you kind of peel it back and compare one to the next, you could see that exhaustion on the way up. Well, what I noticed with this last push up in the last few weeks to the, you know, the most recent new highs was an increase in distribution into that top. The internals really kind of deteriorated. And so, you know, that's a warning, obviously. And then we have a Dow theory non-confirmation in the works. That's a warning, obviously. And some of the other DNA markers are now in place, and those are warnings. And so we haven't been here yet since the advance out of the 2016, 15/16 4-year cycle low. So there are some developments. Now, ultimately, we need the structure with the cycles and the Dow theory primary bearish trend change, which, again, let me stress, is a structural thing to solidify, to cement the deal. Okay? And I don't know, flip a coin. Either that's going to happen, A, or B, it's not. If it does, then we got something bigger working. If it doesn't, then, you know, it's more of the same, and you know, the top continues to try to form. But here's what's interesting. When I look at foreign indexes, and I don't talk about them routinely, but I keep an eye on them. What I notice is that, you know, looking at the CAC or the DAX or whatever, you know, even the Russian indexes, I mean, it doesn't matter. Pretty much everything ebbs and flows together. You know, the 4-year cycle tops and bottoms are very close. The intermediate term cycle tops and bottoms are fairly close. I mean, they don't all turn to the same day or maybe even the same week, but the general ebb and flow is very, very, very similar. And when we look at, for example, the CAC, you know, we made a 4-year cycle low. I'm looking at the chart. It looks like it was January, February of 16, and we've moved higher and moved above the previous 4-year cycle top. You look at the DAX, you see the same sort of thing, and obviously on the industrials. But here's what's interesting. Here's a kind of a very interesting crack, let's say. Looking back at the Tel Aviv 35, you know, you go back to 1998, there was a 4-year cycle low, and within a month or so apart, They both made that 4-year cycle low, and then they both rallied into the 4-year cycle top in 2000, and both down into the 4-year cycle low in 2002/3, and then up in 07. I mean, it's just the rhythm is pretty much the same. Down into 9 and up, and even the highs in 10 and 11 were very, very similar in timing and their overall structure. Well, what's interesting is that when you look at all of these markets, everything made the 4-year cycle lows in January, February of 16, and the Dow Jones Industrials was the exception. It made its 4-year cycle low in August of 15. And from there, the important point is that everything has advanced out of those lows, and in most cases moved higher, such as the CAC, the DAX, and the industrials and so forth. Well, what's interesting is the Tel Aviv market, which has historically moved to the same similar rhythm, it did not participate, and it pretty much flatlined. And this last week, it actually broke below what would be the 4-year cycle low last year. And so I view that as a major crack in the foundation. I mean, that's, if you have all these averages is moving together, and now this one has seemingly failed miserably, you have to view that as a warning. And then when I look at the CAC and the DAX themselves, they look like that we've got, and have had for, a little while now, intermediate degree and slightly higher degree tops in place there as well. And so there's major warnings, but we need to get Dow theory primary bearish trend change to solidify it in the U.S. markets. I mean, ultimately, each market has to stand on its own 2 feet technically, but when I'm seeing the how do I say this, the fact that these markets are out of sync a little bit, and that we're seeing evidence of a top and evidence of a failure in one, then I can only view that as a warning. You combine that with the DNA markers that we do have, you combine that with the constant distribution, and the handwriting's kind of on the wall. I'm not saying that we're 100% there yet. This could fall in place real quick. We could also see the can get kicked down the road again, but that's getting increasingly harder and harder, and it's looking increasingly more and more unlikely because it's looking, I don't want to use the word dire, but it's looking more and more serious. The setup is looking more and more serious. So I'm concerned. The market's at a very precarious juncture here, an important juncture technically, and again, the ultimate determining factor is going to be whether or not we can see a Dow theory primary bearish trend change occur.
We'll have more with Tim Wood right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Tim Wood. Tim, what do we expect to see when this bear change happens?
Jim, it's really somewhat difficult to know, but let me say it this way. Every 4-year cycle top in history since the inception of the averages in 1896 has occurred with a primary bearish trend change. We know that we are sitting, well, some of us know, the technicians know, and a few other people that, are thinking, that we're sitting on top of or what seems to be on top of a massive bubble. And knowing that we get, knowing these things, when we get that primary bearish trend change, then, the ingredients are in place for the bubble to pop. And, is it a slow unwinding or is it a fast unwinding? I'm not sure that I know that, and I'm not sure that anybody can know that. But what I do know, and this was in one of the quotes by Herbert Hoover, and I'll paraphrase because I don't have the quote in front of me, but he said the degree of the decline is directly correlated to the degree of the advance. And that's true. And if you look at any parabolic advance in history, they pretty much do completely unwind. So once that's in place, the ingredients are going to be there for things to get pretty nasty. It's just a matter of does it and how long does it take for it to materialize and get nasty. Now, that said, I want to preface this on the air up front because it's always the way things happen. And it's not an excuse, it's a fact. Typically, when you get a Dow theory primary bearish trend change, obviously the market's headed down to trigger it. And typically that happens, well, not typically, it always is. It's you're headed down into an intermediate degree cycle low, so by definition, there's a bounce coming. And even in 1999, Richard Russell called that top. I think the date that the primary bearish trend change occurred was September 23rd of 99. The market was going down into an intermediate degree low. I think it was maybe October. I'm not looking at a chart. And then we got the intermediate degree advance that carried us up into January, and the industrials actually made a new high. And so it looked to discredit his call, but the Dow theory primary bearish trend change, it stuck. It was not blown out. The transports didn't confirm the move, and it was a good call. In that case, the market pretty much went sideways in most of 2000 and into early 2001, and it was later before it materialized. I don't know if we're going to get that kind of setup, or if it's going to be more like 2007 and it just comes unraveled. But the point is that we need to see that primary bearish trend change, and then once that's there is going to be, or typically there's going to be some degree of bounce out of an intermediate degree low. How successful that bounce is and how long it lasts, nobody knows that, but it's going to be an intermediate degree cycle low and coming out of the bounce. And the dangerous thing is that we've talked about this for a while now, and it sounds like, fear porn and completely discrediting at this point. But the thing is that nobody's expecting this. There are some talking heads and people like myself out on, doing YouTubes or whatever like you and writing letters and trying to warn people, and, nobody's listening, nobody believes it. And that's the point, is that it's been totally discrediting because of the degree of the advance, the bubble, and so forth, and so nobody's listening, nobody's expecting anything. So when you cry wolf, nobody's going to be listening, and that's my fear, is that it's going to set people up for they're not going to realize what's happening. They're not going to want to believe what's happening once it starts. So anyway, that said, we're not all the way there yet, but we're in a dicey spot. So let's see how it develops.
We'll have more with Tim Cyclesman Wood right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're talking with Tim Wood. Tim, what do you expect to see if the cracks start to happen with this bubble? What kind of action do you see for gold?
That's interesting. Gold is holding up better than I anticipated, but still within the parameters of the 9-year cycle low still lying ahead. And the intermediate term advance is still alive in gold. Nothing has happened to tell me, when I say intermediate term advance, I'm talking about the advance out of the July low, which should be a counter trend advance. It's still intact. I do have a short-term sell signal on gold. It should evolve into an intermediate degree sell signal, and gold should go down with everything else, just like I have said, into the final washout into the 9-year cycle low. Now, that said, and this is not double speak, if structure changes, and like I said, that gold has, this intermediate term advance has been, how do I say this? It's been more relentless than I would have expected. So it may be that gold is sensing something here, and we see the structure change. If we see the structure change, and there's some very specific things that I need to see, then okay, I'll have to roll with that and say, well, I guess it's in. But at this point, that hasn't happened, and so I'm still of the opinion that the 9-year low is ahead, and pretty much the same thing with crude oil as well. We often talk about crude oil, and I think we probably have gotten the intermediate term top there. Let me look at a chart real quick. I know we got the short term top, and yes, we have evidence that we have the intermediate degree top in crude oil, so we should see gold follow.
What about other industrial metals?
Well, I haven't looked recently. I know that copper, you kind of caught me off guard on that. I haven't looked recently. I know that copper was on fire into a top, but it should pretty much follow, because, and I'm not saying that copper will necessarily make a new low, but it should, and here's why. Copper moves to basically the same 9-year cycle rhythm that gold does. And so I realize that copper has been very strong. I just pulled up a chart, and it's impressive. But still, that should be a counter trend advance that is followed by at least another retest of the 2015-16 low.
And of course, copper is an indication of how much industrial activity is taking place, isn't it?
Well, sure. And, there are some other metals which I don't look at them routinely, but, lead and zinc and, tin and various other metals that would tell us the same thing, but it's not charts that I look at routinely, so I can't speak intelligently on them at the time.
Are we being set up for another Black Friday, August 25th, like we were exactly 2 years ago?
It's entirely possible. It is, and that's what makes this market so dangerous. That's what people don't understand. You stretch a bubble and stretch a bubble and stretch a bubble. Well, okay, the more you stretch, and that's the thing that has been so frustrating. I see it stretch, but it doesn't pop. Well, but that doesn't negate that it's a bubble, and the more you stretch it, the thinner its skin gets. And so when it pops, yes, absolutely. That's what I'm saying. We're very vulnerable. And, it's almost a crystal ball question of how it unfolds. I don't all the way know that, but I do know it's a bubble. I do know we have cracks. I do know that we have, that once we get it out through your primary bearish trend change, that you better hang on, but exactly how fast, I don't know. Is that a possibility? You bet. And given the fact that it's a parabolic advance, I kind of lean in that direction that it's probably going to unfold fairly quickly.
Tim, thank you so much for your insight.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for the show or our guests, you can email us at info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.